Welcome back to another Earnings Lottos Power Hour Live. I'm your host, Pete. Today is March 9th, Monday, March 9th. There's not a ton of earnings to go over that report this afternoon and tomorrow morning, but we will still look at all of them, or at least all the ones that I have down here that are good for potential earnings strangles, find some that maybe pique our interest, and then maybe take a play. But we'll see. We'll see. Today is a very light day. So I think this is a good day to fade. If you don't have any conviction on any of the stocks reporting tonight or tomorrow morning, today is definitely a good day to fade. Save your money for better reports later this week. So without further ado, let's take a look at the deep dive calendar for tonight. We have some somewhat notable names like Vail, Casey's, Hewlett Packard, but for the most part, a lot of the ones that report today and tomorrow morning are kind of lesser known, maybe cheaper shares, that kind of thing. But like I said, we'll still look through all of them just to get a good feel on things. And if the narrative intel is pointing out something that maybe the technicals or the technical histories don't. So we will first look at this company, LifeMed, which I know nothing about. Looks like they're a pretty cheaper share healthcare stock. Looks like direct patient to telehealth. So it looks like maybe like a Teladoc type company. If you guys know Teladoc, TDOC, that is a healthcare stock that has been known to make some pretty wild swings, inside earnings and outside earnings before. So it's just kind of interesting that they're both in kind of the same sector. Pretty decent expected move, but it is a very cheap stock at $3.10. Only has done, or not only, but 5 out of 8 quarters over 10% up or down is a pretty good history, although it is a cheap stock, so just something to keep an eye on. Not the best narrative intel coming in for LifeMed. Looks like they do have some GLP-1 telehealth sentiment, so like I said, like I touched on like very briefly with Teladoc, there's some like virtual doctor, virtual healthcare stuff going on there. Looks like maybe they're into some weight loss GLP drugs. Looks like they have the stock itself has a similar tape to a Hims or Hims type names. Hims popped last Friday. I'm not quite sure how it did today, just with a big drop this open and things kind of grinding back up. But nonetheless, looks like a very similar stock to Hims. Technically speaking, volume strangles that are coming in, nothing really that piques my interest at all. This to me kind of looks like poop. I don't like these. I don't like the volume. The open interest is nice, but I rarely pay attention to that. I'm more interested in volume over open interest because it shows that people or traders are kind of in the moment trading that, instead of having just bought things weeks prior and them just kind of leaving open on the chain. Nothing really interesting to me here with LifeMed. I would say this is a fade unless you know something I don't know. If you know the company personally, if you've been doing DD or research on it, don't let anything I say dissuade you from trading it. But as far as an earnings lottos play, definitely not one that piques my interest. And it's not one that I would want to force. It's a really cheap share price, so it's getting negative points for that. It does have a pretty small float, 39 million shares on its float. So that's probably why it's been able to make 5 moves over 10% in the last 2 years, up or down, but not something I want to force. And nothing stands out as far as the strangle that we're pulling up on the website. So I think this is a safe fade, but I do like that move history. So I'll definitely keep an eye on it tomorrow morning and see what happens. Vail, so MTN or Mountain. So Vail Resorts, they do a bunch of ski resorts out in the Midwest area. It's kind of a chain operation. And they so it's not just ski resorts, but it's like ski resort towns. So it's a lot more than just skiing and snowboarding. They do just a lot more, or a little bit more than that. But that's kind of, obviously, that's what they all center on. They center on skiing and snowboarding and that kind of thing, winter sports and activities. A nice share price for Vail, $134 a share is nice. I like that because a 10% move means about a $15 move up or down. But I don't like the fact that it has only moved once over 10% in the last 2 years. That does not tell me that it's a very consistent earnings mover. It could pop. It could definitely move, make a 10% move tomorrow. I wouldn't be surprised. I would, if it had zero moves, I would be surprised. One move implies that it can do it. It has done it in the past, but it's just not one that consistently makes big moves on earnings. It's not really in a good, it doesn't really have a great narrative intel either. And that's probably why it doesn't really pop on earnings or drop on earnings for that matter. More of a slow grinder, I would say, like a low move, cyclical type stock. I haven't seen. I think during ski season or in the thick of it, there was news and there were like people posting on social media about long lines at ski lifts and that kind of thing. Maybe Vail was having issues with employment for their own kind of like seasonal employees, but I haven't seen or heard anything lately. I usually have an annual ski trip every year. You can see my skis back there in the corner, but I did not go this year. So if you want to use that and buy a put, by all means. But no, I would actually recommend not trading Vail at all for earnings, unless, like I always say, unless you know something I don't. But the stats do not paint it as a pretty or kind of a consistent earnings mover. The strangle that we're pulling up, we're finding the 150 call. Looks like this one looks like Vail has monthlies, which I always like myself. Just gives me a couple extra weeks to work with. Next week, though, is the 20th, so next Friday is OPEX, just something to keep in mind. The 150 call is 10% out of the money. That's not too far out. That's not bad. The volume is not over open interest. It's tough to say if these are bought or sold. It's probably a mix, just because that $1.05 contract price is not, it's not crazy expensive and it's not crazy cheap. It's definitely on the lower end as far as cheap goes, but the 10% out of the money doesn't really scream to me like they're being sold. The 125p, this looks more realistic as far as an actual trade. So 7, almost 8% out of the money down. Looks like it was last traded at 285 a contract, and there's good volume or decent volume over open interest, 288 over 244. So that tells me that there is some interest on just this day alone. So this tells me that traders are probably buying the 125p. I'm not quite sure what they're doing with the 150 call. Could be a mix, but this to me definitely looks like Mountain or Vail is going to lean down on ER. But it's not something that I would want to force, nor I would suggest forcing. That just does kind of stand out to me. The 125p, good volume over open interest. Kind of a decent, well, not really a decent EL score. That one move out of 8 quarters hurts the EL score a lot, or it doesn't really help it a lot. Good share float, or really low share float, so 35 million shares. That means Vail or MTN can definitely move if given the right guidance, or the wrong guidance, I should say too. And like I touched on earlier, the share price is nice. I like that for a 10% move. That means that a 10% move is going to be anywhere between like $13, $15 probably. So not the best earnings play, not one that I would force. Only one move over 10% in the last 2 years, so keep that in mind. But this 125p is a little interesting to me. Not interesting enough for me to buy a contract though. The next one we'll look at is Voyager. So VOYG. This is kind of a new stock. I want to say maybe they only had 2 or 3 quarters reporting under their belt. There's a couple of stocks like that this week that the X out of 8 moves over 10% doesn't really help, just because they've only had like 1 or 2, 3 quarters to report. Nonetheless, not the greatest EL score. A pretty decent expected move from Voyager. One move over 10%, so it shows it can move. This one does kind of pique my interest for some reason, just even outside without even looking at the option strangles. I like the narrative intel here. Space and kind of like defense has been a hot sector as of late. Rocket Lab, AST Space Mobile, even Lunar, those types of stocks, they've been doing pretty well, and there's a lot of interest on those because they are kind of cheap, and so I think you're seeing investors scooping them up for the long term and hoping that they can 2x, 3x, 5x, that kind of thing. So Voyager does kind of stand out to me. It is kind of interesting, but keep in mind, so like we say in the narrative intel, space and defense is definitely hot right now, but there's also high volatility because it is a newer public name. So not as many reports under its belt as far as earnings go. 36 call and the 24p are what is being pulled up on the website. The 36 call, this looks like it's way too far out of the money to be realistic as a bot position. 34.5% out of the money up. With that contract price, I would imagine these are probably sold. So probably sold on the bid. And not a ton of volume, and nor really a ton of open interest. So just something to keep in mind there. It doesn't really look like this is a hugely popular stock with options traders quite yet. But there's enough volume on there to buy contracts and be able to sell them comfortably, I think. The 24p, a little bit more realistic, 10% out of the money down. And again, the contract price is also a little bit more realistic here to imply that it might be a bot position. No volume over open interest. 113 contracts bought and sold today versus 543 that were just waiting there on the chain. So nothing really standing out to me. I was hoping to see something closer to the money on the call side and a little higher of a premium contract, and more volume over open interest. That would tell me that traders are expecting a good move up with Voyager. This doesn't really tell me that. This tells me that maybe they're apprehensively thinking on like a down move or small down move. So VOYG, I think, is a good fade. It's safe to fade. And if it pops tomorrow, it pops. It does. Then that's fine. I only want to put myself in the absolute best setups. I don't want to force poor setups just based on a little speculation of hope. And to me, this is just speculating hope. So I would say Voyager is a good fade, but keep an eye on the report and the move tomorrow morning because it is a newer public name and it's definitely one worth watching just because it's in that space and defense sector. Yext. So we'll look at Yext. Looks like they do. I want to say when AI was kind of like the AI craze was starting out, Yext was an AI name. I feel like I remember people looking at it this was like maybe 2 years ago when AI was just being started to talk about in stocks. So I feel like Yext was supposed to be the next one to run, but I don't know if it really did. So we'll take a look at it for earnings and kind of see what they're involved in. Looks like they are services maps. So it looks like the knowledge engine platform lets business manage their digital knowledge in the cloud and sync it to approximately 200 services, including Apple Maps. So definitely more of like an AI cloud-based company. Definitely in the tech sector. Not the best narrative intel, but not awful, I would say. It is a sleeper candidate for a re-rate. They do have good positioning in AI search. If they show, our narrative intel is saying if they show accelerating adoption or improved margins, then small cap software can definitely gap. So if they have good numbers and they show accelerating adoption, or if they have improved margins tomorrow on there or tonight when they report and have good forward guidance, this is definitely one that could gap. We'll take a look at some of the technicals like share float. If it's a really big share float, then I wouldn't want to say it would gap or be like a great candidate for gapping, but we'll take a look at that in a second. The strangles that are being pulled up, so the 6 call, not more than 10% out of the money, so it looks like it's a pretty close to the money call bet. Volume, not great volume over open interest. The 5p is a little further out of the money, 10% down, 25 cents a contract. And with volume and the open interest, again, not really seeing anything that jumps out to me. So I think Yext looks like a fade. 3 quarters out of the last 8, it's made a good move of 10% plus up or down. So that's not awful, but it's also not great. The share float, not huge. 102 million shares is relatively small. So this is definitely one that could make a gap up or down, depending on its guidance and earnings and kind of margins and that kind of thing. But it's not one that, nothing other than the narrative intel, nothing really stands out to me about Yext. But again, like I said, if you know something I don't, or if you've been doing your due diligence on Yext and you really like one side or the other, don't let me dissuade you from doing that, or from making that play. So we will move on from Yext, take a look at Casey. So Casey's General Stores. So this one has actually popped on earnings before. I can remember those times pretty distinctly, but the historical numbers aren't really great for Casey. Only two moves out of the last 8 quarters over 10% up or down. It doesn't really have the best expected move for today, and the stock price is 650. So a 10% move, you're looking at like a 65 or potentially a $70 move. That's not really what the options chain is telling us for this quarter, but something to keep an eye on and something to keep in mind as we look at the strangles that are being pulled up. Narrative Intel, definitely more of a defensive consumer type. We have Dollar General this week too, and I would kind of lump Dollar General in that category as well. Ollie, I would also do that, lump them into the same category. So more of like a defensive consumer type company, usually a steady grinder. But like our Intel says, it can definitely surprise in inside sales, margins, guide cadence. So that's what has led it to gap up and down in the past. But for this quarter, I don't really think anything is standing out to me. These calls and puts, these are interesting. This tells me that there are some traders with pretty deep pockets that are strangling it. 6.5% out of the money for the 700 call. Pretty expensive, so $7.80 for that. But there is good volume over open interest. So that definitely means that there is more interest in just the day of earnings, which we always like to see, compared to open interest, which is obviously past contracts that were bought and are just kind of sitting there on the chain waiting to be closed. On the other side, the 630p, for about 4.5% out of the money down. Also another pretty juiced up contract at $15, but good volume over open interest. I would say based on these two volume numbers and the price in the contracts, I would say this is probably the same trader doing some sort of strangle. Maybe they're buying one side and selling the other. It's kind of hard to see, or kind of hard to tell. I would think that this is probably someone that trades Casey pretty often, or maybe a Casey shareholder that's just doing a strangle into earnings. But I wouldn't want to force anything here. I think those contract prices are too expensive. And I think if you start looking at things that are closer to 10 to 15% out of the money, you will certainly be paying less per contract, but keep in mind that this is not a very strong historical earnings mover. So I think you're forcing a trade here by buying an out of the money call and put on Casey. I think the trader that bought these is probably an insider or someone that trades Casey often, or like I said, someone that holds Casey shares and is just playing the earnings just to play it. So I think this is a fade as well for today. Really nothing is going to stand out, I think, as like a must play today. If anything, there's going to just be maybe individual contracts that just kind of look a little weird and kind of pique my interest. But I will spoil it and say that probably none of the ones that I talk about today are going to be must plays or great candidates for ER. That being said, I can almost guarantee one of the stocks that I talk about in the next few minutes will be a good earnings mover for tomorrow. So if you're someone that just can't help but always play earnings, keep watching, because we'll definitely talk about something that will move. I can almost guarantee it. If we haven't already, maybe one of these moves, maybe LifeMed, Mountain, Voyager, or Yext, or Casey move. I don't know. That's the cool thing with earnings. You never really know. All right, HPE, Hewlett Packard. Everyone knows Hewlett Packard, HPE. Not my first computer. I grew up on a Mac and then went to Dell right away. But definitely have HP laptops that I've used at like companies and jobs before in the past. Decent share, well, not a decent share price, I should say. It's a cheap share price, $21. So a 10% up move or a 10% down, we're looking at like 23, 24 up, and then maybe like 18 or 19 down. So nothing crazy. 3 quarters out of the last 8, it has made a move 10% up or down. So it's definitely in the cards. It can definitely happen. but it is not a consistent 10% mover. So I still think you're forcing a trade buying HPE here. If you do any of the ones, I'll just say this while we're talking about HPE because it has 3 out of 8 moves. But any stock that has less than 4 moves out of 8% or out of 8 quarters that are over 10% up or down, you are definitely safe just buying one side. I would not suggest strangling that. The reason being that it hasn't proven that it can consistently move 10% up or down. So if you bet one side and that one side doesn't work, there's a good chance that the other side didn't either. If that makes sense. Versus something like MongoDB that at 7 out of the last 8 quarters, it's made a 10% plus mover up or down. It definitely behooves you to buy an out of the money call and an out of the money put with something that can consistently make volatile moves up and down. So just to get that out of the way, good narrative intel, or kind of an interesting narrative intel with HPE. Looks like they do have some AI server demand and some good enterprise spend. If they talk about strong AI system and orders and they have a strong backlog, HPE can definitely gap up or down. There is good AI infrastructure adjacency with it. The strangles that we are finding, that's interesting. So the 22 call, very close to the money, 74 cents. These certainly, and there's good volume over open interest, so these certainly look bought to me. That 22 call is very close to the current share price. So I don't think people are expecting, or traders aren't expecting a huge move up. But the 19p being 12, almost 12.5% out of the money downward, and at 25 cents a contract, and with this volume, 15,000, about more, obviously more than 15,000 contracts, over 341 open interest, I can almost guarantee or bet that these 19p are sold. So to me, this looks like a bullish, like an apprehensive bullish strangle up. I don't think traders anticipate a huge move for HPE. But if you are itching to play something earnings related, I think getting a 22 call might be a good, or maybe like a couple 22 calls on HPE. That might not be a bad play for you today. It's not it's not a must play, and so because it's not a must play, I'm not going to trade it myself. But this strangle definitely looks like traders are anticipating a small move up, buying the 22 call, likely selling the 19p. That's what I would say there. So HPE calls, not too bad. A little interesting there in the 22 call for HPE. AMP or Amplify Energy, only 2 moves out of 8 quarters over 10%. Looks like they are involved in oil and natural gas. Obviously, oil was going a little crazy this morning and over the afternoon due to all of the geopolitical BS going on, as we like to call it. Narrative intel, not the greatest. And to be honest, a lot of the narrative intel on a lot of the oil companies is not going to be great or very interesting because they are kind of boring companies. So like Amplify, Chevron, Exxon, Schlumberger, however you say it, those are SLB. Those are all not very hot stocks. They're kind of boring. They're kind of boomer stocks. So as such, they don't really make the best moves. Yeah, it looks like AMP trades more similar to the crude or gas tape more than earnings beats. So maybe if you're looking to get out of just trading oil futures, maybe AMP. But I think you're forcing it to that point. I think you're trying to be too smart by by trying to play oil adjacent plays. I think if you're trading oil, just keep on trading oil and just scalping it. The volume leaders that we're pulling in for the option strangles, nothing at all standing out to me about this. I don't really know the company anyways, and nothing in these strangles or these strikes really looks interesting to me. There's quite a lot of open interest on the 6 call. It is really close to the money. Not a ton of volume for today at all. So maybe previous traders were thinking of like a small move up to the 6 call, but it doesn't look. Nothing really stands out to me about this, and I don't like the company nor know it, and it's a pretty cheap stock, so I would just say fade that one. Zevra Therapeutics, another cheapie. In the healthcare sector, looks like they rare disease company combining science, data, and patient needs to create transformational therapies for diseases. So Zevra, 2 moves out of 8, over 10% in the last 8 quarters. 2 out of 8 quarters, it's done a move 10% up or down. Interesting, or not really interesting, narrative intel. Narrative intel is giving us a caution sign, so not great. Biotech prints can rip or dump on pipeline regulatory updates more than EPS. So maybe Zevra is one to keep an eye on and monitor it for any kind of suspicious volume in the future for anything they have going on with rare disease. If anything is going through like approval processes or regulatory process or anything like that, maybe one to keep an eye on. But Zevra, I think, is a fade. So I'm not going to look at that one. And nothing really showing up in the call or the put strangles. So I would just say fade Zevra, but keep an eye on it in the future. Net Power, X Project Group. I'm not quite sure if I'm playing anything today, X Project Group. I will. I haven't looked at the tomorrow morning earnings. I'll do that really quickly. Net Power, I think, is a fade. It's too cheap. Nothing really stands out to me anyway, so I wasn't really going to touch on that one. But yeah, for today, X Project Group, to be honest, I would suggest fading all of the earnings that report today and tomorrow morning. I wanted to look at United Natural because this is kind of the only one that stands out to me as a consistent mover in the past on earnings, but it is really, really cheap. And that only means that a cheap stock, like a $38 stock, is only going to make like a $3 or $4 move on earnings. So the risk reward really isn't there for me. But we'll look at it anyways. United Natural, so they're a wholesaler of natural and organic and specialty foods. I kind of lump them in the same category as like Sprouts Farmers Market. I think United Natural Foods, Unfee, they're a little bit more the distributor, the wholesaler, and then obviously Sprouts is the retailer or the market. But they're all kind of in the same world to me. Like I touched on really quick, so good history of moves over 10%. 6 out of 8 quarters, it's made a pretty good move. I want to say it was maybe 2 or 3 quarters ago, it made a really good move up. The strangles that were pulling in for it, not too awful. This definitely looks to me like a bearish strangle. So there's more volume over open interest for the 36p. It's not too expensive. It's $1.90, but that being more expensive than the 40 call, I think. Well, it's hard to say. It might just be a bull. It might just be both of these sides are bought. I can't really tell or make a good judgment call. The 36p, if it were more out of the money and if that contract price was cheaper, then I would feel a little bit more confident saying that they're sold. But it's really hard to say if they're bought or sold. So this to me looks like a classic strangle. I don't think I'm gonna play UNFI. Because I am personally waiting on some stocks later in the week that I have a little bit more interest in. But if you need to play an earnings play every night, if you're just kind of that person that needs to do it just to feel something, UNFI is a good option, I would say. So I would personally buy a 40, maybe a 41 if a 41's available, and then probably like a 36 or 35p. I think that's a good strangle to have. But just know that with a lot of the weird stuff going on in the world this week, we had a lot of volatility on oil over the weekend. Futures opened last night down a ton. They grinded back up today. There is just a lot of weirdness going on. And it's this share price at $38 doesn't really scream to me as a must play. But I do like this strangle. So if I was playing everything or anything and everything, I would buy a contract of each of these, but I like the put side more. Kohl's, we'll look at Kohl's. Good history of moves over 10%. A really cheap share price. So right off the bat, to me, this is a fade. A 10% move off of 15, or not even 15, but close to $15 is not really that much. Kohl's did make a big move one of these recent quarters. It made a pretty big move up. Actually, I think for the past 2 quarters, it has It has no, it hasn't. Okay, I was going to say for the past two. I think last quarter was 14%, so it was close to 15% up last quarter and the quarter before. Um, Not the best narrative intel. Definitely more of like a retailer grinder. The calls and the puts that are showing up, interesting. This is definitely, I like the volume over open interest for the 1650 call. It's a little far out of the money, so hard to say if these are all bought or sold. Probably a mix. I'm probably leaning on the majority of these being sold. So that implying KSS or Coles is going to make a somewhat down move tomorrow. But not a ton of volume on the 1350p, which is within 10% down. So I think traders are anticipating probably a small move down for KSS. Nothing that really piques my interest or screams a must play or must trade for Coles. Buy on tech, I'm going to fade because that doesn't have any moves over 10% in the last 8 quarters. Esperion Therapeutics, I kind of put this in the same category as Zevra earlier, so very, very cheap. Some amount of quarters, it's been able to make a good move, 10% up or down, but it is way too cheap of a stock for me to get into. Anyways, Legend Biotech, same kind of thing, although a better narrative intel. We will look at the narrative intel. Looks like there is good growth narrative. They do some cell therapy type stuff. And it seems like it's more of an institutional biotech. But traders don't really look like they are targeting Legend. Not a lot of volume or open interest, to be honest, on these strangles or these strike prices. So I'm out of that. Neo or Nio, complete fade. No interest at all. Way too cheap a share price. I know traders love the EV sector and they love trading Neo. I traded Neo or Nio or whatever, however you say it, when it was, I think it was like in the 20s or somewhere up in there. It was definitely more expensive than $5 a share at one point, but I could not care less about it now. Not the best narrative intel. I mean, obviously everyone knows China EVs are way better than the American EVs. That's just a fact at the end of the day. That's why they're not allowed to be sold in America. But the stock itself, not really a sexy stock at all. Huge share float on Neo. So 2 billion shares on Neo. That's really, really big. And that to me means it is a no touchy. That means that it will not make a very volatile move unless it gets a ton of liquidity. This would need a ton of liquidity for it to make a pretty meaningful move up or down, but Neo is a fade for sure. Neo, ABM fade, Uranium Energy fade, no history of moves over 10% in the last 2 years. So I would say if I absolutely had to make a play, I like the HPE calls. I like the 22. I like as close to the money as you can there. I think it's okay to just buy one side of HPE. This to me, the 19p, really cheap contract price, ton of volume over open interest. These all look sold to me. There's no way. If it does make a crazy down move tomorrow, then we know why it made a crazy down move. But I like the closer to the money calls on HPE. And actually, those puts are cheap enough to where you probably could strangle it and get away with it. But because it doesn't really have a great history of move up or down over 10%, I would say you're okay just getting one side. So the only one I really like today is HPE. Those HPE calls. Keep an eye on Voyager and how they report tomorrow. Don't think it's going to make a big move, but for shares or kind of future guidance, it's something to keep an eye on. Tomorrow afternoon, there are much better options. So save your money. If nothing really stands out to you, if nothing jumps out to you today, definitely save your money. We don't want to be spending or throwing money, carelessly. That's the whole point of EarningsLottos.com, is to make sure that we are putting ourselves in the best possible scenarios and best possible setups and situations, so that if they go the way we are anticipating, then great. And if they don't, at least we know we put ourselves in the best situations. No FOMO over here. So I hope this was helpful to you guys. Not a ton of stocks to go over for today, but I will be back at it tomorrow around the same time, hopefully before 3:15, just because there are some juicier names to talk about. If this was helpful to you, please like the video. Please subscribe to the channel. That helps me a lot. Just shows me that people are interested and this is content that we all like. This helps me actually. It helps me make really informed decisions myself on my own portfolio. So I hope it helps you too. All right, with that being said, best of luck tomorrow. It is 4 p.m., so the market's closed. Best of luck if you took any earnings or if you're trading oil or anything for tomorrow morning. But have a great rest of your day, and I will see you tomorrow. Peace.